In this video, traders, we're going to look at hypothetical trading systems. Stay tuned. Hey traders, a very warm welcome to you. Okay, so we see we're seeing quite a big rise actually in people selling future systems, commodity systems, or spread betting CFD, any market vehicle system out there that is based on hypothetical trading results. Now, before we start the video, I just want to make it clear that just because it's hypothetical doesn't mean it's a bad system, but you have to be very, very cautious with a hypothetical system more than you would have to be if it is a real system. All right, what do I mean? Let's have a look. Okay, so a hypothetical trading system, it's very, very easy to come up with a system that works in hindsight. You know, you or I could look at a chart now and say, hey, how has that last 6 months been? Has it been rotational? Has it been trending? How has it fared? And adjust your strategy to suit. If it's in a trend day, I could say, hey, if it's been a trending time, I could say, hey, you know what? Buy breakout system, develop a system that buys breakouts, new highs, develop a system that buys moving average crossovers. You know, you could come up with a system very easily that absolutely smashes it based on previous results. Same with range bound. You could say, hey, just use a mean reversion system, some sort of Bollinger Band system, whatever it may be, right? We can go on forever. The point is, it's very easy to come up with a system or strategy that absolutely kills it when you know what's going to happen. So you can come up with something and say, hey, look how well this performed in the past year. Oh, great, you're a genius. Yeah, but we don't know what's going to happen next year. Don't know what's going to happen next week, next month. You know, how is the system? The point of that is it's just a complete joke, right? So watch out for that one. This real time is a real misleading terminology. What they're really saying with this is they're saying, hey, you know, when we kind of put the system and we put the data in bar by bar by bar, it executed very well in real time. It performed amazing in real time. So they're just replaying data and the system and the trades being executed as the data, as the candles being fired. That's no use. That's no use to anybody. We know in the real world that doesn't account for anything. It's not real time as in we're trading now. Real time is now, what is happening now, not 1 second ago, not 1 second in the future, right at this second. You can't call it real time when you're just replaying old data. So watch out for that one. If someone's saying real time, dig down and say, well, actually, have you been testing it? When you say you would trade it real time, has that actually traded as the market has happened? Or we're talking about replayed data in real time? Keep an eye out for that one, guys. Right. Number 3, financial limitations. This means that the system won't take into account, if you're trading it with real money, the drawdown that you'll have. Can you stomach the drawdown? Listen, if you trade a system and it's losing for 3 months in a row, would you stick with it? You probably wouldn't. But the fact is that system may well be profitable because it makes money for the next however many months you're trading the system for. Looks great on paper, but there's these little spells where you get this brutal drawdown. You have to apply more margin to it. Maybe they're taking on bigger position sizes that are kind of hidden in this stuff. Maybe they're adding multiple times to the trade. And yeah, on paper it looks great. But the risk on that is all of a sudden like 50% of your account, 60, 70, 80% of your account if it goes wrong. But it comes back, and so it doesn't matter. It looks really good. So watch out for the financial limitations. And the same thing, going back to the hypothetical versus real. If it's real money, no one's probably going to sit through all that. And if they do, you're so close to blowing up. It's a useless system in my eyes. You know, if you're drawing down massively and by luck you're kind of pulling yourself back up and making 200 or 300%. So what? You know, a couple of bad trades could have put you straight in the bin. So forget about that. Be careful about that, should I say? Right. Oh, and number 4, guys, not tested under real conditions. Listen, we have slippage on stops. We have slippage on fills. We don't get filled. We miss fills. This is the real world trading. If you're a trader or I'm a trader, we know how it works, right? Sometimes you're going to get stops, you get slipped. Sometimes you don't even get filled on any limit. You might be in the queue, might not get filled. It might get to 1 tick bout, might not even trade there. You might miss a fill when you try to get in a market order. You know, you might have a delay. It's just so many things that can happen that just don't come under kind of replay conditions, because they say, oh, well, it price traded there, we'll fill you there. It's like if you trade on a demo. Some demos, you know, were skewed and you could buy at the bid and still at the offer. And it would say, well, as soon as it kind of just traded there, it would fill you. We know it's not the case. If it's a CFD, it's obviously this whole spread's got to go through. If you're trading directly at the exchange, you've got to go through all the people that are in front of you in the queue. So there's plenty of kind of parameters and variables that mean that real world conditions are nothing like past conditions, or replay conditions, should I say. Next one you've got to watch out for, which kind of verges on the fraud. Bearing in mind all these are probably okay, just about. I mean, I'm not a lawyer or anything, but they're probably within the realms of law, just about. You know, you can have hindsight results. You can say this would have worked. You can use terminology that's almost can be misleading, but it's not quite completely misleading. You don't have to disclose these financial limitations, and you don't have to. These are things that you can kind of get away with, I guess. This is when you verge on the fraud, possible rigging of results. So somebody might say, okay, I'm going to say I took that one, I'm going to say I didn't take that one, and maybe just skim off a few big losers, make sure the big winners have got full size, you know, just little massaging of the data just to make it look good. Overall, it's probably a system that they've genuinely come up with, again, maybe with hindsight, but they've kind of massaged the data a bit. Maybe they've pulled the entry back a little bit, or not ignored one of the stops, and just played with it a touch, just so they feel they're, you know, boosting the result. And that can make a massive difference. You miss a couple of good trades that were just monsters, especially in a training environment. That's the system. The system is catching those. All right, last one, guys, is system costs ignored. If someone's charging you $500 or something for the system, 1,000, whatever it may be, or percentage of gains, however they're structuring it, are they factoring it in? Don't forget, if they're charging you X amount per month and it's not performing, let's say you have 4 or 5 months at $1,000 a month or whatever it may be, you're 4 grand down and you're only trading with a 20 grand account, 30 grand account, 40, whatever it may be, you've still got to make a hell of a lot back. So sometimes the system costs are ignored. So the final summary is, be very careful of this, guys. If you see a hypothetical trading system, be very careful about buying it or getting involved with it. It's easy to have a hindsight system that works. You want somebody, really, not saying this, you can't find something that's useful, because there are guys out there who are undercapitalized and perhaps are very good at coming up with something, but you want to look at it. You want someone really who has trade it with real money, no matter what size. You know, put some real money on the line. What's the track record with it? And I myself was more impressed with a system that's been traded with real money, has got specific rules to it, has got good risk management. That's a key thing for me. I don't want someone just swinging and being lucky. Has how they deal with drawdown. That's a big thing. When you're in drawdown, what does the system do? Does it just keep plowing ahead regardless? Does it back off? You know, how big was the drawdown? What's the biggest drawdown? How does that relate to the market conditions? All this kind of stuff is the kind of what goes into the components, is the word I'm looking for, the components of a good system. Not hypothetical, not kind of ignoring all the margin requirements and limitations you might get financially. All right, guys, keep an eye out for that one. Thumbs up if you like this kind of stuff. See you next one. Take care. Bye-bye.